Today, Bitcoin faces pressure amid a sell-off in tech stocks. President Trump's crypto advisor hosts a meeting between the banking industry and crypto executives on how to resolve the issue of stablecoin rewards. And in an exclusive on-camera interview, Senate Agriculture Committee Chairman John Boozman explains what's next after his committee advanced its version of a crypto market structure bill. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies have been under pressure this past week, with Bitcoin sliding back below $74,000 this morning as traders continued to move out of tech stocks. As of noon Eastern, Bitcoin dropped 17.5% over the past week, Ether sank around 29%, and XRP fell more than 20%. Now, Bitcoin is facing its worst weekly performance since November 2022, when the cryptocurrency fell more than 20%. Now, its lowest level of the past week was $72,884 reached yesterday as investors continued to rotate out of risk-on assets amid mounting geopolitical concerns. That marked Bitcoin's lowest price in nearly 16 months. Bitcoin first fell below $80,000 over the weekend. The cryptocurrency often correlates with risk assets, and on Friday, stocks dropped, led by tech names like Microsoft, which slid after its earnings disappointed investors. Bitcoin's plunge was worsened by forced liquidations. That's when traders' positions are automatically sold as it hits a certain price. Also, investors have been considering the potential impact of Kevin Warsh, who was chosen to succeed Jay Powell as Fed chair. In a note out this week, Bitwise CIO Matt Hogan said we are in a, quote, full-blown crypto winter and have been since January 2025. He did, however, offer some good news, saying that we're closer to the end than the beginning. Okay, let's talk about this week's top stories. SEC Chair Paul Atkins and CFTC Chair Michael Selig held a joint event focused on how their two agencies can work together to regulate digital assets. Ahead of the event, the two chairmen joined CNBC Squawk Box to discuss their goals to regulate the crypto industry.
Blockchain technology has now been around for about 15 years, and it's really transforming the way that these markets are really developing within our remit, but really offshore. We've seen a lot of these technologies and assets move offshore, and we want to bring it back. And so I think with legislation and work together between the SEC and the CFTC, where you can really codify sensible, common sense, reasonable, rational rules of the road for the asset class.
At Thursday's event, both chairmen said that their collaboration marks a departure from prior turf war and duplicative compliance concerns. At the event, which included one of Selig's first public remarks as CFTC chair, he said that both agencies will continue to create a crypto asset classification system, even with no overall crypto market structure bill in place. He added that he expects to see a federal framework for digital assets in the U.S. in the near future. Next, a government official and top royal from the United Arab Emirates purchased a $500 million stake in the Trump family's crypto venture last year, months before the Trump administration gave the green light for the sale of advanced AI chips to the UAE. Now, that's according to the Wall Street Journal, which reported over the weekend that Ariam Investment, a company backed by the Gulf nation's national security advisor, took a 49% stake in World Liberty Financial, a crypto company founded by the president's family. That would make the firm the largest shareholder of World Liberty and the company's only known investor besides the founders. According to the Journal, the deal was signed by Eric Trump in the days before his father's second inauguration as president and came as the government official was seeking access to advanced AI chips from the U.S., which the Biden administration blocked over concerns that chips would end up in China. Some lawmakers responded to the Wall Street Journal report by warning of potential conflicts of interest. Senator Elizabeth Warren, the top Democrat on the Senate Banking Committee, called the reported move corruption plain and simple and demanded that the Trump administration reverse its decision to sell sensitive AI chips to the UAE. The White House didn't immediately respond to CNBC's request for comment. This week, President Trump's crypto advisor, Patrick Witt, led a meeting between crypto executives and the banking industry on how to work through points of contention in creating a crypto market structure bill. Two sources from the crypto industry told CNBC the meeting was mainly focused on whether stablecoins should be associated with yields and rewards, and that they came away feeling like some banks were not open to compromising on the issue. The meeting, which was held on Monday, came after the Senate Banking Committee's consideration of its version of a crypto market structure bill was postponed last month at the last minute after opposition from the crypto industry, including Coinbase. One of the main reasons Coinbase CEO Brian Armstrong said he couldn't support the bill's text due to, quote, draft amendments that would kill rewards on stablecoins, allowing banks to ban their competition. According to the two sources, the White House gave those in attendance a deadline to reach a compromise on stablecoin yields before the month is over. Now, following Monday's meeting, in a joint statement, the banking participants said that their goal is to ensure that legislation protects the safety of the financial system, adding that banks of all sizes will continue to work with lawmakers, the White House, and other stakeholders to help develop policy around digital assets. Blockchain Association CEO Summer Mersinger said in a statement on Monday that the meeting was an important step forward in finding solutions to deliver bipartisan digital asset market structure legislation. And finally, sticking with crypto regulation, we saw a major milestone for the U.S. this past week when the Senate Agriculture Committee voted to advance its version of a crypto market structure bill, although the bill advanced without bipartisan support. Thursday's development marked the first time crypto market structure legislation advanced beyond a Senate committee. Senate Agriculture Committee Chairman John Boozman had worked with Democratic Senator Cory Booker on a draft bill last year, but Booker walked away from the version the committee voted on Thursday. During the hearing, Booker outlined some of the issues he and his Democratic colleagues have with the bill.
The White House has made this infinitely harder. And I've had private conversations with Republican colleagues, staffers that agree with me. First of all, the fact that Donald Trump is grifting on crypto himself, it's like me creating a Cory coin. I'd probably prefer a Klobuchar coin. But this is ridiculous that the President of the United States and his family have made billions of dollars off of this industry and are still trying to create a framework here without the kind of ethics that would prevent this kind of gross corruption in our country that would undermine our nation's democracy.
We reached out to the White House for comment related to the concerns from Democrats tied to the president's crypto ventures, but did not hear back yet. However, in past statements, the White House spokesperson told us that there are no conflicts of interest. For our main story, in an exclusive on-camera interview, I spoke with Senator John Boozman about last week's big development and what happens next now that the committee he chairs advanced its version of a crypto market structure bill. I watched the Senate Agriculture Committee's hearing on its version of a crypto market structure bill, and there certainly was some contention between Democrats and Republicans, but ultimately the committee voted along party lines to advance the bill, marking a major development for digital asset regulation. Now, in a statement immediately following the hearing, you called the vote a critical step toward creating clear rules for digital asset markets, but acknowledged that there's still more work ahead. Can you elaborate on what this development signals to you as chairman of the committee?
Well, I think it's really important. And what we were aiming at first was protection for the consumers. I think we've done a good job of that. And then also allowing the industry to grow as times change. So many Americans now are involved in the crypto industry. The crypto industry itself wants to be regulated. So that they can attract pension plans and banks and things like that. So they do realize it's important that they have a regulated entity. Right now it's the Wild West. And so I think we came up with a good product. We've been working on this for months and months and months and really made good progress. Cory Booker, who was the chief negotiator on the Democrats' side, he's head of the subcommittee on the Ag Committee of this particular thing, really did a good job. And we made a lot of headway. It wasn't a bipartisan, final product, but we changed the bill significantly. And I think we'll get there in the future as we work forward in the remaining steps.
You did, in fact, work on the Senate Agriculture Committee's version of crypto market structure with Democratic Senator Cory Booker of New Jersey, and that happened last year. But Booker walked away from the version the committee voted on last week, which he stressed was different than the prior version. During the hearing, he said it wasn't in accord with the principles laid out in November in a bipartisan way. And we'll get into some of the specific issues Booker and other senators had with the updated text in just a bit. But I'm wondering, what made you feel it was the right move to proceed with the bill after losing bipartisan support from that earlier version?
Well, the earlier version was a framework. It was a working sheet. And a lot of it was bracketed. In other words, it was in red because we couldn't agree to agree on the particular stuff. And so because of that, we had many changes that we included from the Booker team into it to try and make it appeal more to them. Again, which were fine changes. We also listened to industry. They had some concerns with the framework, so we took those into account, and when we could, tried to accommodate them. Again, always looking at protecting the consumer. So a lot of that was just bracketed stuff that there really was no agreement. And that's why we weren't able to agree to put our names, both of our names, even on that. Well, we did put our names on that framework, but much of it was bracketed and subject to, we can't agree. We're going to spend some more time working on it. And we just never could get to agreement on those things. So it made it difficult. So at some point, we felt like we needed to move forward. I think in going ahead and voting and, advancing the bill out of committee, that will give some momentum. And we still have plenty of time to work on the things that they're concerned about.
And let's go through some of the issues Senator Booker and other Democratic members of the Senate Agriculture Committee had with the text. One big issue had to do with President Trump's crypto ventures. Booker said Democratic concerns with the bill include the fact that President Trump is, quote, grifting on crypto himself, which he called ridiculous. What is your response to his concerns about the president and his family's involvement in crypto?
Well, there were a number of issues like that came up at the end of the hearing in the form of amendments. And I have sympathy that, those protections need to be included. The reality is those things are not part of our committee. We're charged with a very narrow portion of this. And so those are things that we need to work with banking. We need to work with the House. Nobody's addressed that. And then again, come up with a solution. So it's not that we were against trying to address concerns. Like I say, our committee is pretty narrow in the jurisdiction that it has regarding the commodities aspect. So banking plays a major part. And then again, the House.
As you just mentioned, during Thursday's hearing, Democrats offered amendments that would have included banning public officials, including the president, from engaging in the crypto industry and addressing involvement in digital commodities from foreign adversaries. None were approved. And I know you said part of the reason was because the issues are outside the Agriculture Committee's jurisdiction. So what happens next as it relates to a crypto market structure bill? Do you think there's a chance it can advance with all those concerns from Democrats in the mix?
No, I do. I think there's a real willingness for many Democrats to get there on some of the subjects. In fact, all of the subjects that you just talked about, the amendments concerning banning ATMs and, all of these things that really are being abused right now. Those are very valid. They need to be done. The protections need to be put in place, but it simply wasn't under the jurisdiction of our committee. One of the members on the Senate side said you should go down and look at the banking papers in the SCIF. That's where you go and look at the secret stuff. And my point was, well, it is in the banking papers. It's not in the agriculture, portfolio down there. These are things that again, banking is going to have to deal with, and we're going to have to deal with them. But they're going to run the lead. As far as going forward, I do think that there's a real willingness for both sides to get there. So many Americans are involved in this. It needs to be regulated, both for the consumer, so importantly. Also, it needs to be regulated in such a way that we allow it to grow where it doesn't push offshore, and then there's no regulation at all. And that's really where we're seeing the things that we read about that are so bad right now. So I think that banking will do its homework. They've got an issue with banking concerning the ability to do rewards or interest or whatever, and that's certainly a concern for both sides as to how that gets worked out. Those are difficult issues, but I do think they'll be resolved.
Yeah, I want to expand on that because last month the Senate Banking Committee's consideration of its version of a crypto market structure bill was postponed at the very last minute after opposition from the crypto industry, including Coinbase. During your committee's hearing last week, you said you look forward to working with the Banking Committee on issues discussed during your markup. You mentioned it again today. Those points include scams linked to crypto ATMs, which you mentioned. Did those discussions start yet? Where does everything stand right now, especially as it relates to the key concerns Democratic senators had with the Senate Agriculture Committee's draft of the bill?
No, very much, and that's one of the reasons that I'm very optimistic that we're going to get this done. We had our markup, and literally haven't missed a beat in regard to working with our Democratic colleagues to find solutions to these problems. So, yes, those discussions are ongoing. We very much enjoy working with Senator Booker. He's been a very willing partner, and he's very knowledgeable about the subject. And like I say, he wants to get there for all the reasons that we've talked about. Both sides just have a little bit different view of of how you do that, but both sides want to get there. And so the fact that we've been able to continue to have those communication lines open and working is good. And then likewise, the same is true of banking. They've been very helpful on both sides.
Now, this week, a gathering led by the president's crypto advisor, Patrick Witt, took place where crypto and banking executives discussed provisions in the crypto market structure bill. Two sources from the crypto industry told CNBC a big focus was on the topic of stablecoin rewards, which you brought up today. That issue helped put a pause on the Senate Banking Committee's hearing on crypto market structure last month. The banking industry has been urging Congress to close what they deemed a loophole in the Genius Act that allowed intermediaries to pay interest on stablecoins. Banks have argued that this would lead to a flight of deposits from the insured banking system, potentially threatening financial stability. Some crypto companies, especially Coinbase, have been fighting back against that claim. What's your take on that point of contention? And are you optimistic there will be some sort of resolution to help advance the Senate Banking Committee's version of a crypto market structure bill so that there is a chance it can combine with your committee's version and ultimately move to the full Senate for a vote?
No, I think you've really brought up a good point. That's really a significant contention. And you've got two powerful forces. You've got the banking industry and now the crypto industry that is still in its infancy, but is gaining dramatically almost as we speak. I think both sides have legitimate concerns. And at the end of the day, because there is a willingness to get there, I think that we'll find a compromise that both sides, it might not be exactly what either side wants, but the key is finding something that both sides can live with. And that's what we're really working hard to do. And I think not only are Democrats and Republicans cooperating, but also the industries are trying to find a path forward also. So I'm optimistic. I think that we can get this done. There's a lot of forces pushing it forward. And, we'd like to celebrate passage in the not too distant future.
Senator Boozman also shares his outlook for a timeline as to when the Senate Banking Committee could be ready to proceed to markup of its version of a crypto market structure bill. You'll be able to check out the full interview with the senator over at cnbc.com/Crypto World. Okay, that's all for this week. We'll be back again next Wednesday, February 11th, with an inside look at the first ever CNBC Digital Finance Forum taking place next week in New York City. The event brings together industry leaders, innovators, and policymakers to explore the evolving decentralized finance ecosystem and how Wall Street is positioned to capture its momentum. We look forward to seeing you then.